Hey, worked again. Man, I'll tell you. Sometimes that doesn't work the first time. Okay, so good afternoon or good evening, everybody. Glad you're here. Thank you so much for being here. Appreciate it. Kevin, you just ripped the band-aid. Not me. I wanted to keep my money for a while, so I kept my money. But it's paid now, so we're all good. Taxes are paid. All right, so the market here yesterday. Yesterday was a killer in the SPY here, absolute killer. Dark cloud cover. It had no follow through today. It did have a lower low, but the buyers were able to come in and pick us back up and closed us up above halfway of this dark cloud cover candle here. That's what that line is right there for. I put that up earlier today just so I could see it there. Another chart that I think is so important, I mentioned it here so many times, is this FNGU chart, the FANG ETN ETF here. I do truly think this is an important chart to keep an eye on, because this is what's really leading the market right now, is this big tech. So we need to keep an eye on that. Bearish engulf yesterday. Today definitely turned out a bit better than I expected. I don't know that I expected some great big sell-off, but I'm not sure I expected an impressive hammer over here. But I think somebody in the room yesterday said that the market may look like it's selling off until somebody runs out and says, hey, we have a drug that's looking good. And I think that's what happened. One of the things that happened today is one of the companies came out and said one of their drugs is very promising for the COVID virus. So, hey, whatever wants to keep the market afloat, let it keep it afloat. So what we've got here is a great big old hammer. What I'm going to do is draw a line, just kind of eyeball it there, about 50% of that bullish engulf. And that's what I'm going to need to see to be completely out of the woods, for the bulls to be completely out of the woods. Underneath about halfway, there's still that opportunity that the sellers could sneak in there. But overall, the trend is up. Everything is looking good at this point. VXX really dove down today. I was kind of hoping, honestly, and I kind of want the market to pull back a little bit. I was kind of hoping that we would actually come back up, put some legs under this thing, and build a hammer type candle, but that did not happen. The bullish engulf is still there. We still have a low, high, higher low. We have a higher high. We can put a line up here like this right here, and we've still got some sort of a trend working. Let's see what happens with that. But overall, I think I would have to say that the bulls have the ball here. Bulls have the ball. Here's the diamonds. Diamonds really did well today. Nice bullish engulf in here. Did very, very well. For the majority of the day, it just kind of hung out. Let's see. Let's do it like this. Just kind of hung out a little engulf, something like that, and then toward the end of the day, it really popped up and it showed its bull horn. So go bulls, go. There's still a real chance we get up here and retest or even come through these tops. Diamonds a little bit of a ways to go, where the SPY actually popped up here and grabbed some of that top meat up there on this thing before it caved in. IWM, this has been a really, really boring chart, just sort of going nowhere and nothing and quiet and just sort of humming right along. So for IWM, I guess what we're going to wait for is, are we going to break out or are we going to break down? I guess that'll be the big thing right there. What else do we have? Transports. Look at the transports here. Transports are acting very, very well. Low, high, higher, low. We didn't really make a higher high, but we didn't make a lower low either. The bulls kept it up, and they're kind of swinging it up right now. And these last three bars here, this is a doji continuation pattern. Very nice bullish pattern. Let's see if we can't get up and test that 170.60 and push on up just a little bit higher up here. So I think a word that floats around here a lot, and maybe a lot of other places too. I don't know. I'm not privy to other rooms or anything like that. But the word crazy, crazy market. Market pulls back and then it comes up. Crazy. Tesla. I wish I had a buck for every time I've heard somebody say, man, this is crazy. Look at this thing go. Insane. And it is crazy. So how do we trade this crazy market? And honestly, nothing changes. Whether you're in a boring market or whether you're in a fast market, a volatile market, crazy market, it doesn't matter. If you just stick to the same old thing. I truly wish there was something, that we could, pull out a playbook just for crazy markets. But there isn't one. Maybe a little bit of caution. Maybe that's the only thing you might put in your trading. A little bit more caution. I know everybody uses caution, but maybe a little more caution. But outside of that, it's the same old thing. It really is. It's the same old thing. You're looking for the trend. You're looking for charts to. We like to see charts that rally up and then move sideways, something like that. And here we've moved sideways on Home Depot. Here's Home Depot with, we've got a nice little bottom here, low, high, higher, low. You have this nice breakout today. That's the kind of thing we're looking for. And it doesn't really matter if the market is crazy. Is it slow? Is it, some people, I've heard people, the market's bipolar. It really doesn't change your trading. It really doesn't. You stick to the same old thing and you keep doing the same thing over and over. And some people, some traders, they're going to trade stocks that are up high and breaking out. And other traders are going to trade things like maybe Coke here, for instance. This is in an RBB setup. It hit my RBB scan because it's just right at the edge, just over, just a touch. But people would rather trade stocks that are down and moving up. The thing to do is just stick where you're comfortable. Stay where you're comfortable. Stay what's working. Stay where you tend to make more money and lose less. I've always said, trade what makes sense to you, not what somebody else is trading. So, for instance, here and over in Right Way Options, we love the 3/8 trap. I'm sure there's people out there that thinks that's the most ridiculous trade there is. I don't think very many, but I'm sure there's a few. And there's other traders that say, well, okay, oh hum, it is what it is, but I would rather trade something from the bottom or something in the middle. And when I mean in the middle, maybe say from here up to this top right in here. Maybe that's your game. Something like this. Let's just do that right there. Maybe your game is above the 200-day simple. Maybe your game is only the 50 above the simple. Maybe that's your game. As long as it's working for you, just stay with it. And as long as it makes sense. I truly think that's one of the keys is don't trade what I trade. Don't trade what Rickster or Melinda trades there. Trade what makes sense to you. And it doesn't matter how crazy or what is it? It doesn't matter how Patsy Cline the market is. Um, it, uh, it just what matters is that the whole trade makes sense to you. So anyway, I think that's the way we should trade. So, but I heard a Willie Nelson interview one time and said he originally thought of calling the song "Stupid," but better not. So, so anyway, we just looked at two charts that I kind of like here. It's sticking to the same old rules, the things that I like to trade. I can't really point out what say Rickster or Daryl their trades. I can only kind of really show what I like to trade. This is one of them, the rounded bottom breakout. If there is an all-time favorite strategy, then this would have to be it right here. My all-time favorite strategy is trading the rounded bottom breakout. And we're just trading from the 50 to the 200 up here. There's a few little quirks we like to see in it, a few things like that. But overall, that's the strategy. Inside that strategy, you'll find a lot of things like the 3/8 trap. That's why we encourage everyone to make sense of the 3/8 trap there. Vern there says he wants to look at MACD. There's MACD right here, down here. There we go. Can you see that? Yeah, you should be able to see that. So there's MACD right there, Vern. Where it's crossing up now, the green crossing above the red on there. Is that what you're looking for? Right here, the MACD. Oh, McDonald's. You want to look at McDonald's? I see. Okay. McDonald's. There you go. Sorry about that. Long day for me. Long day for me, and tomorrow I have to have a tooth pulled. Isn't that really the coolest thing you can do? So that's how I'm going to spend my afternoon. So McDonald's. So Vern is asking, is McDonald's a setup? It is. Yes, it is. Now, you know, Vern, I'm gonna reach out to you on this a little bit, and you know, I honestly believe that everyone here is a great stock picker. I really do believe that. I believe everybody here understands what a chart should look like. You may not realize what you see, but you see what makes sense to you. And Vern, this is a perfect example right here. You know, you may not be able to rattle off anything about it, but you know what makes sense to you. And this chart makes sense to you, and rightly so. What a beautiful chart. Absolutely beautiful chart. So Vern is asking, is this a setup? Oh, you're asking, is it an RBB setup? Well, let's go look at that. No, it is not an RBB setup. But outside of that, it is a beautiful chart. Okay, I'm going to go back here. We've got a very nice, and I think it's important to write this stuff down on your chart or a piece of paper. I truly do think it's important to do that, to identify certain things in the chart. That way you can use it later on. You'll get where you recognize it easier. You can see it in other charts a little bit faster there. So, and we're going to go back to that RBB chart, Vern, and I'll talk about that in a second here. But I want to look at this chart first because I'm actually going to put this on my watch list. Thank you. I just did. So we've got a really nice inverted head and shoulders here. That is a beauty. It really is a beauty. And I think we should draw a trend line down. pretty much like that. I mean, if you want to put it here, you can. Doesn't matter. And then let's come over here and look at this here. We've got a nice rally up. And one of the best, I truly believe one of the best chart patterns is a continuation pattern. ABC pattern, 1, 2, 3 pattern, they're called that. A J-hook pattern, we tend to call it a J-hook pattern. And that's what this is, man. And this is nice, it really is. Very clean, very organized here. Great candle today on terrific volume today as well. So I'm thinking McDonald's looks good. So at this point now, we have to ask ourselves, well, what can McDonald's do for us? And I'm going to go right for the top up here. That's what I think McDonald's can do for us. We can put a little line right here, but if that's what we're looking for, then McDonald's is a horrible trade if that's all you're looking for. Okay, this would be a horrible trade, I think. I don't think that's going to be a bother, and even if it is, who cares? We're looking for this up here. So what I would kind of look for on this trade is, let me get rid of that, is an entry. So we want to look for some sort of a rest. We want to feel like we made a deal. So how about an inside day, whether it's today, tomorrow, or the next day? Something over here maybe in this green box. And then what we're going to do is look for it to travel up toward that green line for about 6.5%, maybe 7%. It could move further, but this is the trade we're looking at right here. So, and if you buy options on this, it would be a much greater percent, 15 to 20% probably on the options, I'm guessing, from here to here. So I think this is a fantastic chart. Thank you very much for bringing that to the table here. But now let's go look at the RBB setup. And I'm going to get rid of all this now. On the RBB setup, what you need is the trade is always to the 200 simple moving average. It's always to that. It's never past it. Now, I'm not saying that this chart or other rounded bottom breakout charts can't go past it. I'm just saying the trade is only to here. That's the trade. So now, if that's only the trade, you only have about 1%. That makes that a horrible idea for trading. Horrible idea. On the other hand, if you could have caught it down here, you could have made a good argument on that. Now, officially, it's not an RBB setup, but if you're trading options, I tend to cut it some slack because you can turn a 3.5% trade into 10-15% trade with options or more. So you'd have to catch it down here to be an RBB. And it requires, the official RBB setup requires 10% basically between the 50 and the 200, or between the trade, your entry and the 200. I feel if you can't pull 10%, if you can't see 10% in the chart, then why would you want to take that trade? So anyway, and yes, thanks, Bob. Yeah, earnings on the 24th. We need to be very, very careful, everybody, about earnings. With earnings season here, so many times I hear of people getting burned, and it happens to all of us. We get excited, we get into a trade, we forget to look at earnings. Earnings sneaks up on us. Hey, if it works out, good, great, fantastic. But if it doesn't work out, it really can make a good day turn bad. So definitely let's watch for those earnings. Make sure that I'm not against trading in earnings. If you want to trade in earnings, that's fine. Just make sure you know it and that you're willing to do that. Let's see. Somebody's asking here, where would you put the stop on McDonald's? Well, I'm going to go back to this chart right here. Sometimes when I see a chart that looks as good as this, and I think this is a beautiful chart, all right, I really, really do. When I see a chart that looks as good as this, then I will really give it some room. I'll let it breathe a little bit. McDonald's is one of these charts that it might not be an overnight trade, might not be a 3-day trade. This might be a month-long trade, even a little longer for some folks. It might be a trade that, look, unless this trade turns rotten, then let's trade it till it gets up here to 200 bucks, until it turns rotten. And a down day doesn't mean it's turning rotten. If it turns down, doesn't mean it's turning rotten. If if we have an up day and an up day turns back, that's not rotten. That's just a normal trade. So as long as it acts like a normal trade, as long as it can hold support. So we're going to come in here, these tops. If we can break out of 193 and a quarter and then come up here, it deserves to pull back, and that's okay. As long as we hold that 193 and a quarter. We hold that, then we run up into this area here. So for me, the stop would probably be the low of today's candle down there. If somebody wanted to put the stop halfway or maybe at 186 and a quarter, that would be perfectly fine. But on a chart like this, I would give it some room. Let it move. That's a nice chart. So thank you very much for that one. Let's see. I think there's a couple questions. I want to make sure I get them all. Somebody asked about Ford, I thought. Looking for it. If somebody asked about, I could have sworn I saw something, Ford, ticker symbol Ford. If please ask again. I'm not sure what the question was. You had a tooth pulled yesterday. Yeah, I'm doing that. You know, the doctor gave me a choice. He said, we can stick a needle in your gum and we'll just yank it out, or we can give you something to put you to sleep. What do you think I said? So I'm going night-night at about noon my time tomorrow. Night-night, everyone. So let's see. Evelyn, JP Morgan. Yes, JP Morgan is, and JP Morgan is on my watch list. I like that chart. Had earnings. We're finished with earnings. I think JP Morgan looks good. I think this is a chart that we need to be looking at, needs to be on the watch list. This is one that I'm going to put the target up into this area here. A couple of stop-offs along the way, perhaps, but I'm seeing 115. Now, that is an RBB setup. I'm going to delete everything so it's easier to see. There you go. That is an RBB setup. We're sitting right here on the 50-day simple, and we've got about 16.5% to the 200 up here. This is the dotted deuce. I absolutely expect to see a little bit of resistance around that area, and it is truly amazing to me. And this is why I chose this line right here. But it is absolutely amazing to me how so close to that line, if you look to the left, you'll see price action that acts as good resistance or support, whatever direction you're looking at. So I absolutely expect a little bit of consolidation, and then I would be looking for that 200. But JP Morgan is on my watch list. This was going to be one of the trade ideas tomorrow, JP Morgan, and looking good there. Let's see. Just Dennis Richter, JP Morgan. Let's see. PA. What is the red and green dot line? In a few places, single dot is present and between other colors. Yeah. Let's go back over to that chart. There we go. This, you're talking about the red, green dots and the red dots. That's what we call the trendicator, or I call it the red-green line sometimes. It's simply a moving average, and it can be a moving average of your choice. This happens to be the 17 EMA, but you can change it to any moving average you like. And what we're looking at with this, or what we're wanting, is to see how price acts around it. And when price is above it, you'll see that it's green. That's signaling us we have a trend there. Now, I know anyone can see that. I know you can look at just a naked chart there, and you can see that you clearly have a trend. You clearly have a trend starting right here. But I have found that it is very helpful to have that little guardian angel, red dots, don't go long, don't go long, don't go long, don't go long, or the green dots, don't short it, don't short it, don't short it. And that's what we're looking for. In uptrends, in a series of green dots, we want to be trading long. In series of red dots, we want to be trading to the short side. So here's JP Morgan, turned up a little bit. We've got 3 green dots. That's telling us that we have a trend. It's a very short trend at this point, but it is nevertheless a trend. So it's just simply a moving average, and it can be a moving average of your choice. And if you have TC2000, I can only set it up on TC2000. I don't know how to do it on anything else. I don't use anything else. But I do believe there's code out there for Thinkorswim or other programs, perhaps. So, that help you there? AAPA. Let's see here. Oh, there we go. Kevin, there's my. I knew I saw a Ford ticker symbol. I don't have here. Give me a minute. I closed out my Trade Hawk. Just a second. It just takes a second to load. 2 seconds, 3 seconds, 4 seconds. There it is. So you're thinking of Ford here. Let me drop this down. So you're thinking of Ford. So let's take a look at Ford here. So here's Ford, and you're looking at September. September, that's plenty days out. That's nice. I like that. And then you're looking at a $6 strike. A $6 strike. Kevin, I'm going to say yes, that is good. Okay. But let's throw a but in there. All right. It is good. I mean, you can choose any strike price you want. I was working with somebody here recently, and I asked them, and I'll ask you the same. If you went to work, if you went and got yourself a job, and if there was 2 jobs available, there were similar jobs, and one paid $9 an hour, and one paid $15 an hour, which one would you like? Which one would you think you would take? And everything else equal, same kind of job. Maybe they're next door to each other. There's no traffic to deal with, no one, anything else. Well, I don't want to run down and see what you're typing because I'm trying to keep track of where all the questions are. I'm pretty confident you're going to pick the $15 an hour job. So let's just keep that in our mind here. So here, let's see. Does that show up? Yeah, that shows up good. Okay. So you're looking at a $6 strike with a 65 delta. So for every dollar this moves up, you're going to make approximately 65 cents. If you run up here a little higher, here's a plenty open interest. Here's 75 cents. Here's 82 cents. So for every dollar, do you want to make 65 cents for every dollar it moves up, or do you want to make 75 cents for every dollar, or do you want to make 82 cents for every dollar? So is $6 strike okay? Sure, it is. It's your choice. Absolutely. It is okay. Nothing wrong with that. Ample open interest. My goodness sakes. Very good open interest. In fact, thank you for showing me this chart because I'm going to have to keep an eye on it. That looks pretty cool right there. The only thing and I don't know that it's actually going to work out right now because market's closed. But on the $6 strike, you're looking at 6.5% spread. Over here on the 550, you're looking at almost 7.5. On the 82, you're looking at 2.45, so less than 2.5% spread with this one right in here. So, yeah, 65 is okay. Okay, it is. Did that help a little bit there, Kevin? But thank you for the chart. I think that is a absolutely magnificent chart. I have to write it here. There we go. Absolutely magnificent. Thank you very much. Let's see. Bill says, do you always check the price relative to the 200 before deciding to enter? You know, I used to, Bill, but not so much anymore. I think I could live with this chart right here. I think I could absolutely live with this one chart. That's it. You've seen me in the room, and the majority of the time, this is the chart I'm looking at. A lot of charts, I don't even go look at anything else. If I know it's a rounded bottom breakout, I'll go look at that. I have a little, this little purple thing right here. I've got TC 2000 set up so that I can, when that is, this is supposed to be basic. There's not enough room there, I guess, and it cuts it off. But it's the RBB basic, my basic RBB. Just, I mean, we're talking simple, the simplest of RBB chart patterns. That's it right there. And whenever it's in an RBB setup, then this, I'll show you what one in a minute looks like that's not an RBB. But you can see that there. So what I will do, because it's an RBB, is I'll look at the RBB setup. I will go do that. Because I want to, what that doesn't tell me is it right here? Is it right here? Is it right here? But I want to see the chart pattern relative to the strategy, okay? But outside of that, honestly, I think I could just be just fat, dumb, and happy with that chart right there, and really not paying any attention to any other moving averages and where they are. So, yeah. Let's see here. And thank you. Good question there. Neil's pointing out RMD tomorrow. Look at that. Nice, nice, nice chart. That's a beautiful chart. Look at that rally up, that rest, that consolidation back to the 17. Bullish engulf here. Came back over the T-line. That's a nice, nice chart. I'm going to have to write that one down too. RMD. Thank you. So Bill, back to your question now. See, that's all I need to see. I don't need to go see, the RBB chart up here. I don't need to see where the 200 is. I don't need to see anything like that. And speaking of the RBB, notice this purple thing here, or whatever color that is. It doesn't say RBB. Notice this one says 3/8 trap. Kind of cool, huh? So I can be looking at here we can look at a naked chart, and that will show up as a 3/8 trap right there. And if you look at Ford, it shows up as an RBB right in there. So one of those cool things you can do with TC 2000. Let's see here. Let's move down a little bit. Take the gas rough. I am taking the gas, yes. Yeah, I'm going night-night about noon today, my time, or noon tomorrow, my time. Evelyn is asking, I think I answered that, but just to be sure, JP Morgan, yes, that is a RBB setup. Here is my RBB chart. Here we've broken it. Well, actually, this was an RBB setup here. All right, let's start way back here and take a look at it. So we broke out. Actually, the truth of it is, this was probably an RBB right here that failed. Now, the chart pattern wasn't a failing chart pattern, but it failed that strategy. So then the next few days, couple days, we pull back and then we gap up. This becomes an RBB again. All the way through this is an RBB all the way up. Now, the closer you get to some point where Yes, it's between the 50 and the 200. Yes, it is. But why would you want to buy the trade here when there's minimal room? Now, I want to be very clear about something. I'm not suggesting that it could not have gone higher. I'm not suggesting that at all. It absolutely could have gone higher. But what I am saying is this strategy is only meant for that space right there, from the 50 to the 100. That's 200. That's it. This is a different trade up here. So you can see what happened here. It came back down, stopped on the dotted deuce there, kind of halfway. And then we went right down to the 50, and right in here, it lost its RBB status. It is no longer an RBB right through here. Here, it's not an RBB. It became an RBB again, and it failed right there. So we just continued to, price action continued to fail, fall below the T-line, and then all of a sudden, pop, we popped up over the T-line, we popped up over the 50-day simple, and now we have a couple bars of consolidation. So I think this is a beautiful trade. I think it's a very, very good trade. And we have about 15.5% to that 200-day simple. I absolutely believe you're likely to see some sort of consolidation around 104.50. Yes, it's an RBB, and yes, I think it's a chart should be on the watch list, and maybe something to buy if it meets. Maybe you have other qualifications that it needs to meet before it's a buy. I'll wake up. LEN. Let's look at LEN here. Let's go back to this chart. Much cleaner chart. That's a nice chart, Len. I'm gonna write that down too. Thank you, Len. Great little pop out of the box type chart pattern here. So here we rallied up, and then the box just kind of started, and then we popped out yesterday. So very nice. I'm actually going to put this up here. I think we need to watch that top. This chart pattern right here, to me, suggests it goes higher. So we'll still have to wait and see what happens, or if you're in it, I think 2 thumbs up. But now what I would be doing is looking for an entry is close to that line or is close to this resistance that became support. Now that we're on top of it, you want to find, look for that entry, something that make you happy in this area right here. It could be various types of candles. I mean, we could break out tomorrow and you could totally miss it maybe, but then the next day it might pull back and give you a little entry in that area. And that would set it up for that J-hook or continuation pattern. Very nice chart, Robert. Very nice. Earnings are long gone, so that's out of the way, it looks like. Where would I enter J.P. Morgan, Drew? How about right now, today? We get asked that question all the time. And it's really simple. Decide where would you not like this trade? Let's start with that. I probably wouldn't like this trade back below 94.80. I probably wouldn't like that trade back there, okay? Nothing says this chart's going to pull back. We don't know if it is or it isn't. Some people might, I hear people all the time say things like, well, I'm going to buy it at 94.81, and I think, well, you obviously have not been trading for very long. That's literally one of the first things I think of when I hear things like that. Or you only make about 3 trades a year, maybe. Maybe that's it too. So I'm looking at this. I'm thinking, well, what can J.P. Morgan do for me? That's what I'm looking at. What can it do for me? And what can it do for me outweighs the entry by a long shot. So it can do up to 17%. It might get to only 7.5%, and it may fizzle right here. We don't know if it is or isn't. But now that I'm looking at this, what kind of chart patterns do we like? okay? So we like chart patterns that move up, and we like chart patterns that move to the side, rest right in here. That's what we like to see. So now what we're going to do is we have this in place already, right there, right here. It's already rested a couple of days. So now I want to be in here. It's already proved to me that it can hold this area. It's already proved that. Now, when we say that it's proved it, there's absolutely zero guarantee that it's going to hold. We could open this thing up tomorrow. You could buy it right here tomorrow, and the thing could go straight down tomorrow after you buy it. That could happen. But we know from experience, and we know from studying charts, that this right here is a pretty good, whoops, a second, clicked on the wrong thing. There we go. This is a pretty good chart pattern right here to be trading. So where would I enter it? How about today? And not only how about today, but how about anywhere today? How about anywhere from that low to anywhere to that top? Anywhere in there is what I would look to buy. Now, if you want to wait till it pulls back, or if you want to wait for some trick entry that we can only imagine, actually, you really can't predict any kind of trick entry, then maybe there's another way to do it. But me, I look at the chart. If I like the chart, if I can make sense of the chart, if the chart just reeks of going up, which this does at the moment, forget COVID, forget everything out there. If that's what we're trading, then I don't think anyone's going to make any money. That's hard to do. Don't worry about politics. Don't worry about this stuff. You can't control that. You can control this trade, though. You really can control it. You can control the chart patterns you look for. You can control the chart pattern that gets you excited. You can control where you enter it. You can, in fact, do that. You can control where you enter it. And you can control it. If it starts to fall down, you can get out of it. And I think that is total control when you can do that. If you bought it and it started moving down, you didn't like it, you have the control to get out. On the other hand, you buy it and it starts moving up, you have the control to get out here, you have the control here, here, or here. You have all the control. So does that help, Drew? A little bit? And we do. We get asked that question a lot, and it's one of those answers that it takes to do what I just pointed out is not something somebody can just walk into trading and doing it to do. It does take a little bit of time, because we don't want to pay $98.83 for it. We want to pay $97.16. I discovered a long time you can't do that. It doesn't work out that way. We would like to, sure. Heck, I would like to pay $91.10 for it, but I know that doesn't work. So what I have discovered that works is find the chart pattern that makes sense to you, and this chart pattern makes sense to me. We've got a bottom here, a constructed bottom. We're in that RBB setup, so we're above the 50. That's one of the benefits of this. You've got a great candle here. You've got absolutely wonderful follow through so far. That's just resting right in this area. So like I say, I see that. I just want in that trade. So this is one I will be shopping for tomorrow. Let's see, Bank of America. Yeah, I think Bank of America is too an RB. All right, before we go look at the RBB chart, take a look at that. And I've already marked it out. A couple of the banks I've done that too. Look at that trend. Look at that. Look at that. To me, this is just a beautiful chart. Here's our downtrend, and now the trend has changed. So this is pretty This is kind of premature. I don't know that I would end up using that low, but that's all we have. Also, I think that the steepness is too high. So you'll find that I'll do something like this a lot of times. I'll just move my trend line down a little bit because I think that is I think it's a bit ridiculous, actually, a little too vertical. So let's just bring this thing down. Let's let it have some room to breathe in here. So now let's just look at price action. I think price action is absolutely primo in this chart, acting really, really good. Here's the rounded bottom breakout, just barely an RBB today, with some follow through up into here. You know, I think a good single target maybe might be that dotted deuce in there, about 6.5% away, and then you're looking at 16%. Again, I'm not saying it can't go higher, but the trade is only from here to here when we're looking at this strategy. So I think that's a fantastic chart. Where would you enter it? Well, right in here. That's where I would like to enter it, somewhere in that neighborhood right there. Somewhere in that neighborhood, right there. How's that? Right in there. There's going to be traders. Heck, there was traders that bought it today at the low. There was traders that bought it here. I would be happy with anything in this area as long as my risk reward worked out. So maybe we used the low today, the low of today as risk. So we buy it, just to say, in the middle here. You're looking at about 4.25% maybe. To the first target up here is 6.3. This is the one you're going after. There's 16. So there's what was that, 4 and 16? Man, that's 4 to 1 there. That's doing great, doing wonderful. So it's not when I and again, thank you for this question. I don't know. This seems like I want to talk about this, so thanks. When I'm looking at a chart, I want to buy in an area, not in a stupid area up here. If it started rallying up, I don't want to buy it up here. This is set up. I'm willing to buy it here. So it doesn't necessarily matter where my entry is, as long as it's in my circle, as long as my risk and reward works. So some traders come in here, they're going to buy this. All they care about is their risk. So they put their stop in with no vision or no thought of the whole plan. The whole plan being, well, what can this do for you? Some trades look absolutely fantastic, but the truth is there can be no money made in them. There's some trades that way. Man, as good as it looks, I can't take the trade because there's just no money to be made. In this case, there looks like there's money to be made. So it's not so much where the entry is as much as work it out so that the entry and the risk and reward work together. So, for instance, somebody could buy it right here. Nothing would be wrong with buying it right here, as long as the chart pattern was still doing what bullish chart patterns do. So up, back. If it did this and then came back, there would be nothing wrong with buying it right here. And now what we would do is look at, let's use blue. Now we would look at, well, there's our risk. As long as our risk and our reward work out, the trade's okay. I hope that made some sense there. I do. Let's see here. Gordon, dotted deuce is the 200 exponential moving average. No, Gordon. It is. It's the 200 period. It's the front weighted, and the average of the low is what it is. Average of the low. So it is the 200, but it's front weighted, and it's the average of the low. What is the dotted red line? That's the dotted deuce right there, Richard. That's what I just showed there. It's the 200 front weighted average of the low. Let's see here. AB, that's a nice chart. That one is on my list right there. I actually made a list to talk about tonight, and you guys have covered some of them here, but that's one of them on there as well. So we've got a nice bullish trend here. So here's a chart pattern right here. First of all, you can clearly see the trend. I mean, does anyone need, do you need that there? I'll put it there. But you can clearly see the trend. Now we're going to dive in a little tighter, and we're going to look for another trend. We're going to look for this trend, and then we're going to look for that pullback. And now what we're looking for is, or what we want is price to do this, right? So this area in here becomes buyable right there, right in there. Here's one of these cases again where does it matter where we enter it as long as we can see it going higher? If you can see it going higher, you simply plan that trade and then you trade that trade. You guys have all heard me. Say SPT, SPT. See it, plan it, trade it. So see the trade. See the possibility of moving up. See what we've got going on here. We know this is a good quality chart pattern. So now this becomes a buy area. And honestly, what is there? 222 people in here? 222 people could buy this chart, and every single person could buy it at a different price. Absolutely. Everybody could buy it at a different price. And we're all looking for the same thing. So again, I just had to throw that in to the question there on entry. So entry to me is about an area, not about a price. Let's see, Betsy Nail did well for you today. Yes, ma'am. That looks very good there. I love that chart. Great consolidation. Good candle today. We broke out right here. I like the bottom. I'm just marking off things I see here. I like that bottom. I like that trend we've got going on here. I've got like that consolidation here. So, and this is whether you draw this stuff on a chart or not. Maybe you just see it, things like that. Now, however you look at it, I look at this as a pretty good chart. I see a little bit of resistance, but you guys all know how I feel about resistance. It might be a pausing point, might be a speed bump, but it doesn't mean that it's going to kill your trade. So now what we want to do is, well, what can the chart do for us? So let's shrink this up a little bit, and so we can see over here. So now let's start looking at possibilities. I'm going to put one right there. And this is the simplest, the most easiest thing in the world to do. Just look where you've got multiple touches, peaks and valleys, those kind of things. And we're gonna put one more up here just for fun. We're gonna go pretty much right to the top, right in there. So there's a couple of targets that I see, possibilities from this area. So what can this chart do for us? Well, let's see. Well, that first one, we don't care about that. That doesn't matter. We're going to go up here. There's, holy moly, is that seriously 55%? Let me be sure of that. That's a lot. 60%. 60% to that first line. Up here, 92%. And if it makes it up here to 165%. Man, I'd be tickled pink with that first one, and I'm betting most everyone would be too. So where do we enter the chart? Well, does it matter that much as long as you put your stop in at a reasonably good place? So maybe maybe the breakout here, it breaks out, and then maybe you put that stop in there, something like that, or just slightly below. Give it a little room. Actually, now that I look at it and put the line up there, this candle right here, that's pretty fair, I think. We'll put that line right there. So that might be a stop. So you buy it in here. I can tell you right now, this stock is going to be volatile, so that should be a little painful. Yeah, that would be 9% from about right in here. So maybe you don't want to put your stop in there. I don't know. Every trader's slightly different. So maybe you want to raise that stop up if you pay up here for it. So what we're doing is we want the same goal. In fact, let's just forget about these two right here. Let's just shoot for 47.90. Everyone here would love to have that trade. That is our goal. Now, again, there's 212 people in here now. You're going to have 212 different entries. So where to enter? Just match your entry with your stop that matches to your reward. You want, let's see here. Let's see if I can do this. So your entry, and let's do your risk, and here's your reward. How does that look right there? I mean, it's not numbers. It's pretty basic. Just colors is all it is. You've got your entry area, you've got a itsy bitsy risk, and you've got a huge reward right here. So where's the entry? You match your entry with your risk with your reward. And a lot of times you don't get to choose your entry. A lot of times you do not get to choose that. You control it within an area, but you don't get to choose it. Because first of all, I think anyone who says, well, I'm going to wait for a 29.75 entry, like I said, you either make 3 to 5 trades a year? Is that what you trade? And I truly believe that that's what would happen. So we just look for those areas that we trade in, and somewhere in the back of our mind we figure out that, oh, hey, that's a great entry, that's what I wanted, but it's what you got, so yes, I guess it's what you wanted. And now from here you set your stop up, and stop can be set up multiple ways of setting a stop up, multiple ways to do that. So nice, Betsy, great chart. Great chart. I'm wishing you the best on that. And that's got some possibilities. Let's see, Zynga. Ed, if you're still here, would you mind drawing me a line down there, please? Thank you, sir. Zynga, looking to add to if positive tomorrow. Yeah, Zynga's not a bad looking chart. We have a nice little trend up here. I think there are some things that I just don't particularly care for, and this might be one of them. A pair of dojis and a big old bearish engulf. So this, no offense there on this one, Dave, just not my kind of trade. I don't think I would have been buying there. But I do get it. If it starts opening positive, it would show that the bulls are stepping in maybe, and I would get the add to. But this whole 3-bar chart pattern right here kind of spooks me just a tad. Just spooks me just a tad. But I get it. I do get it. Let's see here. Instead of red and green dots, maybe a hammer that comes out of the monitor and hits you on the head when you trade against it. Ed, do you think we could do that? Is that a good idea? No. That would be kind of nice there, Rickster. Or hook up some wires to us, and if we go against it, we get zapped just a little bit. Get zapped. Oh, yeah, Chris, by all means, you're more than welcome to share it, please. Anybody that has it. Thank you, Vern. That's the Thinkorswim indicator link. Thank you very much there. Steve, is there a T-line bounce bear scan? I love the bull. Yeah, the bull, there is. Where... Let me move some things around. T-line bounce. Anyway, it's somewhere around here. Here's the bear bounce. I just had the bull. I know that. But yes, and I call mine differently. Let me go look up the name for you. It's Bear 8 EMA bounce. Bear 8 EMA bounce. And that's it right there. I don't have any other whiz bangs on it or anything. Just simple. Whoops. Let's bring that back up. Put that, stay on top. There we go. So, I mean, here's SQQQ, came up to the T-line, bounced right off of it. All those are going to be about the same. Here, AMRN, right up to the T-line, and boink, hit its head and bounced right off of it. So, not a lot on that today, I'll tell you. Not a lot. A lot of things hit the T-line and bounced up is what they did. Now it's got me looking for it, and I don't know where it is. Huh. Darn it. It's got to be somewhere. Let's see. Steve, did you get that? I want to make sure you got that, okay? It's called Bear 8 EMA Bounce. Let's see. Lauren, I want to see JJC break out of $11. Yeah? Yeah, that would probably probably be a good idea here. So let's talk about this for a second now. So let's look at JJC, and let's just go to a weekly chart. There we go. Weekly chart just gives us a bigger view of what's on the daily chart. It lets us see more. So what can JJC do for us? Well, let's just get right up here, I guess. I think that's what we should do. We'll just go right about to here. How's that? Now let's go back to the daily. So what can JJC do for us? You said about 11. I'm going to move that down just a tad and go up here. So what, 14%? Can we call it 14%? I think that's an excellent idea. So now let's talk about entries. There are people that bought it today. What would be wrong with buying it today? I don't think a thing. I really don't. As long as you stick to your risk. You see, we're all going to shoot for 1260. That's what we want to shoot for. Now, whether you buy it here or whether, and I'm not disagreeing with you, Lauren, by the way. I'm not. I'm just, because that entry question came up, I'm just trying to point out on how you might enter this, different ways to look at it. So if you buy it up here, I doubt seriously we would be looking at something down here for a stop. There we go. I doubt seriously. That is a bit far. And that also would be way below of why you like the chart. You like the chart because of the chart pattern, and now you're waiting for the breakout to make your move. So if it came all the way back here, that would be horrible. So if somebody was to buy it on one of these candles, maybe the low of these candles, this low, if you don't like that low, what would be the wrong with using this low in here? So I'm not disagreeing with you. I think you're right for your trading, but I also think somebody that likes to buy in these areas, tight, consolidated areas like this, I think that would be right too. Now, for your buying up here, where would you've said already what you would like. You would like it if it broke out above 11. That's going to trigger you to be seriously shopping for a buy. So where would you not like the chart? Well, honestly, you wouldn't like it if it came back below 11. So maybe your stop for this, if bought up somewhere above 11, would have to be somewhere in this supporting area that is now resistance. Somewhere in here is now resistance. That would become the supporting area, would become your support. We're still all shooting for that 1260 mark. So as long as you buy here, you've got your risk set up so you can take it, whatever it may be. If you buy it here, You want your risk set up to wherever you can take it. How much pain can you live through? Where would you not like the chart? That sort of thing. You can put lines up there like this, and you can try to hug into this line. I totally agree with that as well. You hug into that line, but no matter where you buy it, if you waited for it to get closer here, you still have to figure out where that stop is, and that stop is kind of a combination of, okay, now you've entered the trade. Oh crap, now what? Well, this is where you've got to figure out where that stop is, or have it all figured out when you go in. So in my case, more times than not, it's I look at the chart, I see the chart, I automatically make a plan in my head, and now I trade it. So let's say I buy it in here, I can see what I need. I wouldn't like it if it fell below this area. If I buy it here, which my stop wouldn't be that high, honestly, I'd probably come in here, something like that. I wouldn't like it below this area. So I've already pre-planned what I want just by looking at the chart. But a lot of times we buy the chart, oh crap, now what do we do? Well, this is where you just have to figure out where that stop is. And again, we're all shooting for the same target up here. That has not moved. So, nice trade, nice plan. Thanks, Lauren. Let's see. Hey, Scott. Richard, earnings. I'm not sure on what, but a lot of earnings, yes. New Bronco. I saw that. Yeah, new Bronco. MT long. So before we get to an end here, we started out with this crazy market. Again, really, I think the thing to do is just simply trade the way you've always been trading. Don't change anything. And the only thing that maybe to tweak a little bit is the caution side of things. Be a little more cautious. That's all. I can say this, and I think a lot of people would agree with me right now, is be careful shorting this market. Feds have put so much money in this market. It's insane. It's crazy. The market just seems like it cannot go down, and when the boat is made with a hull that is so thick and so strong, you can't sink it. So until the walls of this boat thins out, this boat may not sink for a while. So every time everything looks short, just be careful. Just make sure that confirmation is in. And using this red-green line works out very well for that. That really helps. So, okay, so on MT, that's another beautiful, beautiful, beautiful chart. Love that. Here's a nice little uptrend. There's your downtrend right here. Here's your low to your high to your higher low. We're in that area right now. This to me looks like a buy area right through there, maybe even a little bit higher. Target-wise, let's see, I'm using a different line, so yeah, that would work. So right in there, and then I think I would go up here like that. Probably should make this one maybe a little, we'll just make this one a little fatter, that's all. But that's kind of what I would look for. Very nice chart, excellent. And by the way, in the charts tonight, there are so many good-looking charts. It's crazy, absolutely crazy. APA, APA is trying to turn around here. Overall, APA is trending. On the short term, it got a little ahead of itself. It's pulling back. We have a little dip down in here that got rid of all the weak hands. Everybody that was just praying, oh, please, 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 please go up. But it went down. They got squished. They finally quit. They got out. Smart money is stepping in. Very nice chart pattern. Doji continuation pattern here. Anything above the T line, I would look at that as bullish. The red dotted line, dotted deuce, Evelyn, I think I covered that. If you didn't catch it, let me know. Let's see here. Can you explain how to set up The purple. Not tonight. I can't, trader. I would be more than happy to in the room, but I cannot do it tonight. Just it's because it would take too much time up. Okay, but I'd be more than happy to do it on another evening, or maybe I'll throw a video in there, something like that. Be more than happy to do that. And in fact, that's a good idea for a video. Let me write that down. What is that? RBB. Basic. Yep, I'll take care of that, okay? We just simply don't have enough time tonight. Would CEMI be an RBB setup? Well, let's take a look. All we have to do is look at a chart with a 50-day simple moving average and a 200-day moving average on it, and we want the 50-day moving average to be below the 200-day moving average. So, nope, that would not be an RBB setup. No, sir, not at all. Not even close. See right through here? This isn't actually, but it's, well, actually it could be. Holy moly. Yeah, this actually could have been. This was like 30% between there. So this would have been an RBB, but this is not. This is not. Let's see. Please compare. Compare. Why would we want to compare? Yeah, I don't know why we would want to compare the charts. But we'll take a look at both of them. Let's see here. What was it? Compare. Please compare JPP to XLF. Really, and honestly, I don't exactly know what you mean by compare them. But JP Morgan, we've already talked about it. It's an RBB setup, broke out of a trend line. Bulls have a hold of it, and now we're consolidating. Let's look at XLF. XLF is an RBB setup. It's been in a downtrend. It's popped back up over the 50-day simple moving average, and it is consolidating right now. They're nearly identical. If you're looking, if you're asking, well, which one is better to trade, one or the other, maybe that's what you're asking. I can't necessarily tell you that, because I don't know. I can say that XLF, you're buying a basket, not one. JP Morgan, you're buying one. So let's say you buy JP Morgan, and for whatever reason, it just falls apart. It crumbles. But all the other banks are smoking hot. Well, XLF is going to continue to move up. XLF is not going to die if everything is smoking hot, but one crumbles. So maybe there's a little more safety with XLF, but as far as comparing which one's the best one to trade, they darn near look identical to me. Let's see. Okay, I'm not sure what triple decker Oreo or Fig Newton was for, but 2 days over, don't know. Guys, when you type something in, you can't assume I know what you're talking about. 15 minutes has gone by, and then I get to something, a statement there. I've got no earthly clue what they're for. A ticker symbol, more explanation maybe, things like that. But outside of that, I just don't know what we're talking about. The triple decker Oreo cookie, the Fig Newton, but today's over. I just don't know. BB's asking, do you look at the weekly before entering? No, I don't. I want to make this perfectly clear. Okay, this is another one of these questions I get asked so often. I look at the daily chart. The second thing I look at is the daily chart. The third thing I look at is the daily chart. I don't look at weekly charts. I don't look at intraday charts. I trade the daily chart. That truly is all I look at. Now, with that said, there's another little piece to this. I'm, for the most part, a pretty short-term trader. This would be my trade right there. That's it. And by looking at this, and I mean, this is it. Whoops. How'd you do that? Get back down there where you belong. There you go. There we go. So now what I'm looking at, the only amount of money I can make, and let's say I bought this today at 23.16.9, and if I kept it to right here, the most I'm going to make is 10.79% on the stock if I bought the stock. That's it. I won't make any more. I will not take it up higher. This is all I'm looking for. And I look at this. Now let's look at the weekly. How's the weekly going to help me here? And it's not. Now, if you're looking for something longer term maybe, then absolutely take a look at the weekly. I think that is important. But that's not what I do. I'm trading from this point to this point, and that's it. Believe me, that is it. I don't look up here. That is another trade up into here. So if I was trading XLF, looking at only the daily, and I'm going to be trading options. I'm not going to buy the stock. I'm going to buy the options. So by trading the options, what did I say this was? Let's see if I bought it here. We're looking at 10%. So what that is, somewhere around a 30% trade maybe. Let's call it 25. 25% option trade. So here, what I would do is close the trade out. So let's make it blue. So that trade would be closed out right here. Now, if it started trading up again, I very well may get back in it on a breakout, and then my trade might be, maybe something like that right there. Something like that. So now this is my trade. And actually there's a gap right here. So let's make that right in there. There we go. So something like that. So now whatever it is, and I can't measure how much it is when I have this tool up I'm working with. But if this was 25%, I'm going to say, well, that's maybe 25% right there. Oh, Ed, yes, please align. Yeah, please. In fact, if the line comes first or 10 minutes comes first, I've got to leave. So this would be the second trade right here. So I would close this out. I would never myself look for a trade to enter here to go all the way to here. Now, if I did that, I would probably have to look at some weekly charts. But that's not the type of trading that I do. So I don't have to look at a weekly chart. I'm not against that. I have nothing against it. I'm just not sure how the weekly chart's going to help me as a trader, because I'm only looking for these jumps right there. And intraday, how in the world does an intraday help a swing trader? No one could ever convince me that looking at intraday charts is good for a swing trader. Not ever will anyone ever be able to convince me of that. I've done my years of trading and the years that I've done coaching. 99% of people that have trouble and can't make money, as soon as I hear they look at intraday charts, I make them take the intraday charts off. Don't look at them. Don't talk to me about them. Stop looking at them. And they'll start making money almost immediately when they stop looking at intraday charts. So I don't look at weekly, and I don't mess with intraday. Let's see. BAC earnings. Yep, all the banks are earnings this week for sure. We already did the dotted deuce. And then where would you put your stop loss? Emily, again, I have no idea what stock we're talking about. On the RBB chart trade, do you consider earning report? On all trades, I consider the earnings report. Here, I'll give you my speech on earnings. I used to be dead against earnings. I've kind of changed from that. I've kind of changed from that a little bit. But now let me give you my speech on earnings. If you are a new trader, if you are a struggling trader, struggling means to me you're not making money, okay? So you fall in struggling category. If you're not making money, we'll do it that way. If you're a new trader and if you're not making money, and by the way, money to me is You bought a boat last year on your trading. You trade for a living. You bought a car. Put a down payment on a house. Did things like that. Pulled out $10,000 and put in your savings account. Something like that. If you can do that, and if you have got time into trading, if you have time into trading, and you're successful, you can trade anything you want. Go ahead. The only way that you have been successful means you've got scabs on your knees. You know already what trading earnings is. But if you are not successful, and if you are just started, or let me add one more in there. If you have, I'll say, a small account, what is small? I don't know. You have to decide as the trader what a small account is. But if you have a small account, I would steal a car, and I would get in that car and I would drive so far, so fast past the earnings, your head would spin. I wouldn't touch them. No way would I trade through earnings. So there's my speech on earnings. Okay, let's see here. Drew, these nighttime sessions are really helpful for us. Thank you, Drew. And, I agree. I think so, too, because we don't have the, oh, wait a minute, let me go trade this, or we don't have to look at charts live, things like that. So I agree. Thank you very much. PFE, RBB, no. I'm going to say no, but I better go look. And I'm going to say no. Yeah, definite no. Again, everyone, an RBB, the 50 has to be under the 200, and you need to have some money to be made there. So in this case, from over here, and I'm just showing you what an RBB could be, there's 7.6% that can be made right here. The original RBB, I would say no, that's not. Since I've learned a little bit about options, and since that's all I trade is options, I've kind of cut it some slack, because the fact is, on an option trade, that's probably 20%. But this is not an RBB setup right in here. Even if we closed over the 50, there's just no way. 2.5%, we can't call that an RBB. No. Judy, can you please evaluate INSG? INSG, yes ma'am. Let's go to this chart right here. Until this chart breaks out, it's rallied up right there. Seems to be holding it back. It tried it and failed. It tried it again and failed. I'm going to have to say over 12.10, 12.15 maybe is what I would look at for a trade. So in through here, I'm not too hip on it, honestly. Now, with that said, what's your risk? Any trade can be traded as long as your risk is acceptable. So say tomorrow you bought it about halfway in there, down to the low, that's 6.6%. I think that's way too much risk. So maybe if we go to the T-line, that's 2.6. I personally think that's too risky, honestly, Judy. With all the charts out there that's looking as good as they're looking, I might put that one as sort of second, third, fourth. Home builders. We'll look at one of them. Let's look at Home Depot. Home Depot, absolutely fantastic. Home Depot is actually one of them that was on my trade idea list for tomorrow. Home Depot on a breakout. We break out here of Home Depot. We settle in, do a little bit of resting. That looks 250. Man, that could be a $300 stock before you know it. So, yeah. Yeah. Homa 3 times has advanced nail. Not sure it's an important question to ask. Not sure what the question is actually here. XBH. Whoops. BH. There we go. Oh, What am I typing in wrong here? XHB. That's what I was doing wrong. There we go. There we are. XHB is a home builder ETF, and NAIL is a home builder triple. But XHB has advanced more than NAIL. Not sure if it's an important question to ask. XHB and then NAIL. I'm not sure that doesn't affect, BB, I've got no answer to that. I've got no, I honestly don't know. Yeah, I don't know. And nor would that affect anything that I was looking at. Yeah, that wouldn't affect anything at all. If I was looking at NAIL and trading NAIL, I would treat the trade as a trade. If I was trading XHB, or if I was trading that, I would treat that the same way. So I'm going to do the same thing. I'm going to look at the chart pattern. I'm going to grab that entry. I'm going to look at that target, and I'm going to do the same thing with XHB. Outside of that, I've got no answer to. I think maybe you're asking why is that, and I don't know. So, okay. Thank you for drawing that line down there, Fred and TD. I appreciate it very much. Thank you very, very much. I'm going to run out of here, guys. Thanks again. Thank you, everybody, for being here. I absolutely appreciate it. Thank you for all the wonderful questions. Thanks for your patience, letting me rattle on. And for the members, we'll see you in the room tomorrow. For those that are not members, well, I hope we see you soon, okay? You guys take care. Have a great night and be safe.